2017, I joined the team, yeah. My life has changed completely, I'm a new man. 9 to 5, fuck it, I don't need that. I'm a forex trader, please don't ask me where my G's at. I'm a forex trader, I'm a forex trader. I'm a forex trader, yeah, I'm a forex trader. I'm a forex trader, I'm a forex trader. I'm a forex trader, yeah. Nigga, see you later. Nigga, see you later. Nigga, see you later. Yeah, later, alligator. Nigga, see you later. Nigga, see you later. Nigga, see you later. Yeah.
Hello, my guys of the FX Cash Academy. Good morning, good afternoon, good evening to you all, whatever time that it is where you are right now, guys. Some of you are in Asia, some of you are in Europe, some of you are in the United States of America, in Africa, and the Middle East. Wherever you are, guys, I want to give you guys a big shout out, and I want to say good morning if it's morning for you, good afternoon if it's afternoon for you, good evening if it's evening for you. This is your boy FX Cash, and this is the FX Cash Academy. Guys, I just first of all want to take our time to say I am really sorry because this video is coming excuse me, this video is coming a little bit late, and it's just that this past week I had been so busy. From the time I uploaded the introductory video, I ought to have brought you guys, a video on the chat with us, doing all the analysis as introduced in our previous video. I ought to have brought this video showing you guys everything live on the chat so we would understand exactly what it is that we are doing here at FX Cash. And remember, guys, that I promised you all that the strategy we will be using here at FX Cash Academy is pure technical analysis, but we have broken it down to three very simple steps. According to that video, the first step was identifying our support and resistances and then our trend from the higher time frames, then moving down to the lower time frame where we try to identify our E and E. When I talk of E and E, I'm talking about our entry and our exit. Okay, and we have two basic principles that we use to identify our entries and our exit, and we call it the convergence and the divergence technique that we use to identify our entries and our exits. So first things first, we have to always start on the higher time frames, identifying our supports and our resistances. And again, I'm going to tell you this, we always get our support and resistances from the higher time frames and our trend from the higher time frames, because the trends and the support and resistances that we get from the higher time frames, oftentimes, or 95% of times, price tend to respect those areas or those zones, that we identify on the higher time frame than the ones that you can identify on the lower time frame. And when I'm talking about the higher time frame, I'm talking like the daily time frame, I'm talking like the 4 hour time frame, and sometimes even the 1 hour time frame, guys. So let's go ahead right away into our chat. So first things first, guys, we are here today. Okay, we are here today, and this is our chart. We are on volatility indices, and this is the live market. Okay, so I just want to use our strategy to identify some key movements that already took place in the market. Okay, and I would explain to you why they happened, and I would link it to our strategy that we are using, guys, so that you will understand. Okay, so first things first, let us go to our higher time frame, the daily time frame, try to identify key support and resistance areas, guys. So let me just take off all these previous trend lines that I had done. Okay, and then okay, so this is our chart, guys, and we are on the daily time frame here on volatility 75, guys. We're on a daily time frame here on volatility 75, and if I enlarge the chart and try to give you guys a little bit of information what's happening here, you would notice that on volatility 75 the market had been for some time on an up move. If I should take a trend line here, okay, if I should take a trend line from down here going up, okay, you would notice that this market has been on an up move, on an up has been on an upward move for quite some time. Okay, this market has been going up for quite some time, and then somewhere around here, okay, guys, this market has been going up for quite some time, and somewhere around here we had, you see this engulfing candle, we had a breakout out of the structure. Okay, out of this structure, I'm just trying to tell you, I'm just trying to analyze what the market is doing generally right now. Okay, I'm not yet into what we have to do. So we noticed that this market broke out of the structure. Okay, this is an engulfing candle here that broke out of the structure, and then the next day we had a bullish candle that came back to retest that breakout. Remember, in my last introductory video, I said that any support that is broken becomes a potential resistance, and any resistance that is broken becomes a potential support. So this was a support here, okay, a diagonal support that was broken, and this day this candle came back up to retest it. The next day, we still had another candle coming to retest that next zone, but this retest is an indication for you that this market is going to shoot to the downside, and that's why you see this market shot to the downside. And currently, this market is now on a kind of contraction at this area. So you see, yesterday we had this candle. Okay, let me increase it again a little bit. Okay, this candle we had it yesterday, and this candle we had it today. Okay, so you see that the market for 2 days have been contracting around this zone here. Okay, for 2 days the market has been contracting around this zone here. Okay, the market has been contracting around this zone here, but this contraction that we see on the 1 hour on the daily time frame probably would have given us some very, very good moves in the market, guys. It would have given us some very, very good moves in the market. So let's just go ahead and try to analyze some of those opportunities, you know, that happened in the market. Okay, that happened in the market, and that would have given you guys some really good trading opportunities. So right now, first things first, let us try to identify the high of yesterday's candle. You notice that this was yesterday's candle, and this is the high, and this is the low of yesterday's candle. And today we had the market opened somewhere here at the close of yesterday. It showed that it went up a little bit, okay, then came back down right to here, and then went back up, and this is where we have price currently. So if we're looking just on the daily time frame right now, we cannot really see what the market is currently doing, but at least we know the overall direction that the market is shooting down. Okay, because this structure here was broken. Okay, this structure, the trend line that we drew here was broken, and the market is shooting down, and the market would probably come down to test, you know, the market will probably come down to test this area, this demand zone. There's a demand zone of below here. Okay, and this market might probably still push to the downside to retest this zone. So we are looking for the market to still push downward up to this zone before we can have some potential very, very long buy opportunities on volatility 75 to shoot to the upside. But it doesn't mean that currently we cannot have buys and sell opportunities. Remember, at FX Cash Academy, our target is that you'll be able to make at least 500 pips every day in market, guys. And every day we have such opportunities. Yes, every day we have such opportunities, guys. So let's just go ahead right now. So this is overall what the market is doing on the daily time frame. So let's shoot to the 4-hour time frame and see if we can get some structures. Okay, so this is our 4-hour time frame. Okay, guys, this is our 4-hour time frame, and looking on our 4-hour time frame, we can notice that the market has really been consolidating. The market has been contracting around this zone here. Okay, the market has been contracting. There are two things that the market would always do. The market gives an impulse movement, and the market gives a contraction movement. Okay, the market would always give you an impulse movement either to the upside, or it gives you an impulse movement either to the downside, or it gives you you know, contraction movement, just going up and down, just going up and down like this, in a particular zone up and down like this, in a particular zone up and down like this, in a particular zone. Okay, so this is what the market does generally, right? This is what the market does generally. These are the three movements that we have in the market. We have a contraction, we have an impulse move to the upside, and an impulse move to the downside. Like you can see, this is an impulse move to the upside, impulse move to the downside, and now we are on a contraction. There was another contraction here. Okay, there was another contraction here. And every time we see a contraction, guys, we call it an area of value. Okay, it is called an area of value. All these contraction areas are an area of value. It is a place where buyers and sellers, okay, buyers and sellers are trying to agree on a particular price that would be suitable for buyers to either come into the market and take over, or for sellers to come into the market and take over. Okay, that is why every time that we are in a contraction area, okay, on our charts, it is a value area for us, and we want to watch where the breakout is going to be. The breakout is to the upside, then we're going to have a move to the upside. If the breakout is to the downside, then we're going to have a move to the downside. So here we are on our 4 hours time frame, and if I should enlarge the screen a little bit and would want to try to get the structure that this market is giving us, I would be putting a trend line here. I would be connecting this low, and I will be connecting this other low down here, guys. Okay, I will be connecting it like this, and you'll notice that we have this structure there. Excuse me. You notice that we have this structure there, and if we can just duplicate this same line and take it to the high of that particular zone, like this. Okay, guys, so you see we duplicated the line below, which is acting as our support. We duplicated it, took it up to the highest high of that particular area, guys, because this is our area of interest, our value zone right now, and we are going to be working with this particular area. And you see that the market has been coming down, going up, coming down, going up, only inside this area. So we are going to be trading, finding opportunities only inside this zone for now, until we have a breakout of this structure, guys. But mind you, inside this same contraction, we have had several opportunities that would have given you guys like 500 pips, 600 pips, even 1,000 pips, guys. Remember, this is a 4 hours time frame. And if you want to calculate how many pips from down here to up here, let's just see how many pips it is from the bottom of this channel to the top of the channel. That is over 2,700 pips, guys. That is over 2,700 pips, as you can see. Yes, over 2,700 pips. Okay, as you can see. Yes. Okay, so now we have identified our major support and resistance. In this case, it is a diagonal one, not a horizontal one, because you see that it is a slanted support and resistance that we have on the higher time frame. And now we move to our, remember, after we have identified this is the first step. We identify major support and resistance. And the second step, we identify what divergence and convergence on the lower time frames. Okay, so now we're going to go to the lower time frames, okay, and see if this movement from the bottom here coming to the top, if we had divergence, if we had convergence at the bottom here before this move went to the upside. And at this top, we're going to look if we had divergence here at the top before this market moved to the downside. And if here at the bottom we had convergence before the market moved to the upside. Remember, convergence is when we are looking to buy the market, because convergence is when the market is giving us what? Lower lows, but our indicator window is giving us what? Higher lows. Okay, that's convergence. That's convergence, telling us that the sellers are getting exhausted in the market and the buyers are about to take the market to the upside. While divergence is when the market is giving us higher highs, but our indicator window is giving us what? Lower highs. It is an indication that the buyers are getting exhausted in the market, and the sellers are about pushing that market to the downside. So we have identified our our area of value. And now let us go down to our 5-minute. Remember, we look for our divergence and our convergence on our 5-minute and 1-minute time frames. Okay, but our entry is always going to be on our 1-minute time frame based on the breakout system, the breakout system of structural breakout system, which you all are going to see. I explained everything that I'm saying now in that first video. So guys, for those of you who did not watch that first video and you want to catch up, you can just go back and watch that first video, and then you would understand better everything that I'm explaining here. Okay, so now remember, I also made mention that every time we identify our value area, our support and resistance, we are only interested in analyzing whether we should enter a trade when the market comes to the bottom of our value area or the market is at the top of our value area. Okay, so when the market is in the middle here, guys, there are times that, yeah, we can have opportunities, but we are more interested, to have those great opportunities to make the most of the pips when the market moves to the top of our channel or to the bottom of our channel. Like you see, the market came here, rejected and came back down, came down here, rejected and went back up. Okay, and right now we see that the market is in the middle here right now. Okay, so we would only be interested in wanting to take a trade, maybe when the market is down at the bottom or up here at the top. Okay, but in the middle here, we can also take trades based on the breakout strategy of structures, the structure breakout strategy. Okay, guys, which you would also see. And I also explained this in our last video. So this is our area of value. Let's go to a 5 minutes and see the possible entries that we would have had in this particular movement based on our strategy here at FX Cash Academy. Okay, so we go to our 5 minutes time frame, and you would see that on our 5 minutes time frame, this is our channel that we identified on our 4 hours time frame. Okay. This is our channel we identified on our 4 hours time frame. You can see that. Yeah, that is our channel, guys. This is our channel. Okay, and now, okay, let me show you guys something. Let me show you guys something really, really amazing, how our strategy works. If you would notice here, you notice that the market came up here, guys. Okay, the market came up here, tested our resistance up here, okay, and then the market shifted to the downside. Now let us mark this area, go to our 1 minute time frame, and identify what happened at this area that would have given us a confirmation before this market pushed to the downside. Okay, so let's go to our 1 minute area to see if at this area we had any divergence. Here for a sell, we are looking for divergence. If we had any divergence here and a break of structure before this market pushed to the downside. And then we would also come down here and also analyze to see if we had any convergence. Okay, and then we would also go back again in history to try to see, okay, another area here. So let's just start with this one first. Okay, let's go to our 1 minute time frame. Let's go to our 1 minute time frame and try to see. Okay, let's look for that zone. Let's try to locate that zone. Okay, this is the zone. This is the zone. Okay, so let us see what happened in this area before this market pushed down. Okay, before this market pushed down. And first things first, let me look and show you how many pips just this move gave. Okay, this move from here to here, how many pips this gave if you would have been able to take your first 500 pips. Let's say entry was here. Let us look at this. This is 1,100 pips, guys. Okay, this was 1,100 pips on volatility 75 on 1 minute time frame with this entry. Now let us analyze this particular move and see if our strategy would have given us this opportunity. First things first, we go to our higher time frame, we identify support and resistance. We did, and this is our key resistance that we had on our 4 hours time frame. Okay, this is our resistance we had on our 4 hour time frame. Okay, guys, and now we have come to our 1 minute time frame. What are we looking for? For us to sell, we are looking for what? We are looking for divergence. And what is divergence? Remember, I told you guys that divergence is when we have our charts giving us what? Higher highs, okay, or equal highs, but our indicator window is giving us what? Lower highs. Okay, so you have our chart, you would have your chart doing something like this. Okay, you have the market doing something like this. You have the market doing something like this. Okay, you have the market doing something like this. You have the market doing something like this. Okay, what is this market doing? This market is giving you a high here, another high here, another high here. And if you look, you notice that what the subsequent highs are higher than the previous highs. So this is what we mean by higher highs. So the market is giving us a movement that tells you that it is pushing to the upside. Okay, that is pushing to the upside. But what do you notice on the indicator window? The indicator window, instead of pushing to the upside, would rather be giving you something like this. This is what you will get on the indicator window. Let me give you the structure that we would be having on our that we expect to have on our indicator window. Okay. This would be the structure that we have on our indicator window, which is the opposite of what we are having on the chart. Okay. This would be the structure. This would be the supposing structure. Okay, so you notice that this high, which corresponds to this high, okay, and this high, which corresponds to this high, then this other high corresponds to this high. But as the market on our chart is going up, rather the highs on our indicator window is coming down, okay, it is coming down. Now, this is what we call divergence, all right? Another way we can see divergence is when our chart is giving us rather something like this. Okay, when our chart is giving us something like this, okay, our chart gives us something like this. Our chart is giving us something like this. What is this? This is equal highs, okay? It is giving us equal highs. The highs are equal, okay, telling you that the market moves sideways, okay? But on our indicator window, you would see the chart not moving equal, but the chart would be moving like this. The chart would, sorry, on our indicator window, you would see instead something like this. Like this. Like this. Okay, so what do you notice? You notice on this market that our chart is giving us equal highs, or what we call double top, but our indicator window is giving us lower highs, okay, and not a double top. You cannot call this a double top. Rather, it is giving us lower highs. All right, remember our definition of divergence is this. I will repeat it again. We have divergence. Divergence means that our chart, the information on our chart is presenting us, structures of higher highs, okay, or equal highs, whereas our indicator window is giving us lower lows. Remember, for divergence, we deal with the highs because we're looking for sell opportunities, and with convergence, we are using the lows because we are looking for buy opportunities. So these are the things that we want to see at the top of our support. Okay, these are the two different kind of structures that we want to see. We want to see either this one at our support level, or we want to see this one at our support level, and the corresponding structures we want to see in our indicator window is this one for this and this one for this. Okay, so we want to see the structures that we have on our indicator window should be the same, but we want to have either this one or this one at the area of our support that we identified on the higher time frames. Okay, guys, so let's go ahead and see if any of this structure match what we are currently having in our market. If we look at these two structures, we notice that on our chart already, the structure that we have here at our support is this one. Okay, it is this one. We have double tops. So I'm just going to go ahead now and delete all these things that I drew here. Okay, let me just delete all these arrows so that we work with a clean chart. Okay, good. So let's analyze now on the chart. Now, I took off our support and resistance from the 4 hours time frame. Sorry, forgive me about that. Let me just go back and do it. Let me just go back to our 4 hours and put back our support and resistance. It's very important. So we had this zone here. We had this zone here. You have to always, make sure that your trend lines touch the tip of the zones, okay? The tip of the zones, not just the body of the candles, but it has to touch the wicks, the edge of the wicks. So that was our zone. Okay, let's go back to our 1 minute. So first things first, we noticed that already price came to our support, to our resistance zone, okay? That's the first thing. Price came to our resistance zone. Where were we? Okay, this is it. This is the area. So first things first, price has come to our resistance, and now we are interested to identify sell opportunities. Why? Because on our major time frame, price is at our resistance. Okay, price is at our resistance on our major time frame. So here we are. Let me go back to the 4 hours and try to take this line a little bit up so that we can work with it better. Okay, and it's good to always have very accurate, it's good to always draw these things very accurately. Okay, let's leave it there. We go back to 1 minute. We go back to 1 minute. Now you see that we have adjusted our lines, and it is at the top of that where our candles had the rejections. Okay, so what do we see? We are seeing here that we have a double top, which is also equal highs. And what do you notice? You notice that the market is moving on a sideways pattern here, okay? And this high, let us draw a vertical line on this high to see where it corresponds on our indicator window. So I put a horizontal line. What do you see? It shows that this high is this same high here. And let us identify the second high. This is the second high here. This is the second high here, okay? Let us identify the second high. You see, this is the second high, and on our indicator window, this is the second high. So what do we notice? We notice first things first that on our chart, we have equal highs, but on our indicator window, we have what? Lower highs. Why is it lower highs? Because we know that this second high is lower than this first high, but on our chart, the two highs are equal. So this is what we call divergence. So this is the first condition for us to understand that this market would definitely sell. This market will definitely sell. So what's the first confirmation? The first confirmation is that market has come up to our to our resistance area. That's the first confirmation. Second confirmation is we have divergence. We have divergence. And then what will now be our third confirmation, which would be also our entry? Okay, it is now going to be what? A break of structure, a break of structure. And what's the structure that we want to see here? A break of a breakout, not a break of structure, but a breakout. Okay, we want to see a breakout. And how do you identify breakout? When you will notice that when this market was coming up, it was giving you a structure. And what is that structure? Let's identify that structure. Remember in our introductory video, I told you guys that when the market is coming up to your resistance, okay, on your 1 minute time frame, you will always see that the market gave you a structure which you can use for a breakout system, for a breakout entry technique. And now let's identify it. What do you see? What do you see, guys? This is a structure that this market gave us. You see that this market was respecting this area here. It was respecting this area here. You see the rejection here. You see the rejection here. You see another rejection here. It was respecting this area. So we draw it like that and link those lows. What are we looking for? We are looking for a breakout of this area, and that would be our entry. Remember again, in our previous video, I said this, that any strategy that does not give you an appropriate place for your entry, an appropriate zone for your stop loss, and an appropriate place for your take profit, that strategy is bullshit. Let us see if here we have appropriate areas for our entry, stop loss, and take profits. Let us go. And remember, for stop loss, I said this, your stop loss would always be the previous high, okay, after your entry. When you enter, your stop loss would always be the previous high. So in this market, where is our entry going to be? Our entry is definitely going to be at the breakout here. And what do you see? You notice that we have a red candle here that broke out of this structure. This candle broke out of this structure, and so our entry would be here at the once that candle that gave us a breakout closes, that would be our entry. So I put this blue line here, okay, and where would be our stop loss? The stop loss rule says the stop loss rule says that our stop loss is going to be at our previous high. Where is your previous high? This is our previous high. So we are going to have our stop loss here just above our previous high, and I'm going to make that one red. Okay, I'm going to make that one red so that you see it as our stop loss. Okay, and where would be your take profit? Your take profit would be the previous lows in that market. And we see we have previous lows here. We have previous lows here. Let's go to 5 minutes and identify previous lows there. You would notice that what? No, let's stay with 1 minute. Oh, let's stay with 1 minute. Let's stay with 1 minute. Sorry, I lost that place. Let me go back there again. Okay, so guys, this is it. Okay, this is it. The previous low, you see, this can be a take profit for you. This can be a take profit for you. Remember, I said your first take profit would always cover up for your stop loss. The first take profit would always be like equal. If you watch that previous video, I explained all these things. I said your first profit would always be like equal pips with your stop loss. Okay, so this low, which is previous low, would be your first take profit. Now let us see if that first take profit, how many pips is your stop loss? Let's see, from your entry to your stop loss, we have 250 pips. Okay, let's see. How many pips to your first take profit? Let us see. 248 pips. You see that? So your first take profit would always annul your stop loss. That's why once the market starts going into your direction, you have to remove your stop loss. Like you entered here and the market was coming. It came to your first take profit, okay? What do? You remove your stop loss and you bring it below your entry level. We are calling this thing break even. This means that if the market reaches your first take profit zone here, okay, and then starts coming back up, it will not, it starts coming back up before it reaches your entry point. It would have touched your stop loss and get you out of the market, and you wouldn't have lost anything on your capital. But when this market comes back up here again, it will still give you another opportunity to enter this market again here. Okay, or even if it surpasses your entry and comes back to test this trend line, okay, it would give you another high for your stop loss to still be at this zone. It would retest this trend line, come back down, okay, come back down, and then you still enter again on this same position here. You still enter this same portion here, and then still put your stop loss at that same place, okay, and then see your next take profit. Look at this. Let's see if you would have had, this would be your first take profit, okay? Your second take profit would be here. Let's see how many pips that would be from your entry to your second take profit. Remember here, you already had 250 pips, okay? So let's say that's 250 pips. Yes, say 250 pips here, okay, at your entry. Let's see this tick. Oh, sorry. Let us see how many pips it would be here. Guys, this is 787 pips. 780 pips, guys. That is it. You have already made your target for the day. If you were looking for just 500 pips, this is 500 pips here. Let me look for exactly five. This is 500 pips. Okay, at this area, you would have made 500 pips. All right, guys, you would have. So depending on the lot size that you used or the capital that you have, you now know how much money you would have made, but at least you made some profit. You made some profit, guys. Yes, you made some profit. And all of this move here was, 1,120 pips. 1,120 pips. And then even before the market started doing all of this now, for you to continue riding this trend down until it reaches the next support area that is down there, what will you be doing? Now you already entered here and the market is here. You have already removed your stop loss and you're preserving now your entry position. So even if the market goes against you, you will not lose anything out of your money or if your original capital. Now the market starts giving you structures. You already know that this market is pushing to the downside. Why? Because on your 4 hours time frame, we notice that what the market is coming from the upper resistance, so it has to push until it gets to the lower support. So once you know that the market is leaving from the upper resistance to the downward path, okay, we are only looking for selling opportunities. Okay, selling opportunities. And on our 1 minute time frame, guys, the market gives us several sell opportunities. If you miss the original entry, you can always still find your way to catch another possibility to keep riding that market to the downside. So let us see what I'm talking about. You enter here already. Now the market is moving downward and is giving you structures. What do? You just keep identifying those structures now, the breakout structures. Okay, now you are identifying the breakout structures. You duplicate this line to the upside. Just like that, guys. To duplicate the line, you have to press Control button down. You have to first of all select the line, then you press Control button, then you click on it and pull it to the upside. It's just going to copy it. Okay, so that's it. And now once it's giving you structures like this, what do you do, guys? You're waiting for a breakout of this structure, and you see we had a perfect breakout here of this structure. Okay, we had a perfect breakout of this structure here, and see this candle broke out the structure. Once this candle ends, your entry would be here. So let's say your entry now is here where this candle ends. Okay, your entry is here. This is your entry. Where would be your stop loss? Your stop loss would be the previous low. Okay, the previous low. Guys, this thing works all the time. Where is the previous low in this market? This is the low. This is the previous low in that market. So this is where your stop loss would be. A little bit above this low here, guys. And see, the market consolidated here, but it finally pushed to the downside. It pushed to the downside, and then your second take profit is down here. This is now your second take profit. See, look at this. Look at this. Your second take profit is down here. Okay, your second take profit is down here. Why? Let's go to the 5 minutes and see and identify those take profit zones. So you see the first take profit area was here. That was it. Okay, second take profit. Look at this. Okay, look at this. Or you would have even looked. Let me remove this, man. Let me shift this one and show you something. Oh, let me shift this line here and show you something. Okay, see, you would have used this low here as your first take profit. This low. Sorry, your second take profit, because your first was up here. So let me just put it. This was your first take profit, which was hit. Second take profit. Your third take profit is here. Okay, this other low. Remember, our take profits are the lows. Your number 4 take profit would have been this low here. Okay, it came to it. Your another take profit would have been this low here, and the next take profit would have been this low here. So you see, that's how you keep identifying the lows and the take profit areas. Why? Because the strategy works, and any strategy must give you clear positions for your take profits and for your take profits, which is also your exit. Okay, which is also your exit, and then it must also give you a clear position for your stop loss. So guys, that is it. That is it. You miss your entry, you keep finding your way in that particular market to ride it down all the way down, because the market already told you that it was a downward moving market. First, you stay on a down what moving market? Because you had divergence in the first place and the market is pushing. Now it gave you the structure. You took this trade here on this structure again. Okay, the market keeps pushing down. The market keeps pushing down. The market keeps pushing down. Okay, the market keeps pushing down. If you look here, there is a convergence here. You see, we have equal lows, but we have higher lows here. But you know why you were not going to take this trade? This trade would have been nonsense to you. You wouldn't be looking at taking a buy at this position. You know why? Because we are not yet on a support. We are not yet on the support of our higher time frame. So you cannot take any buy in this market. You're only looking at taking sales, only looking at taking sales. Okay, and you have to follow the structures. You have to follow the structures. So you see the market came here again, contracted. Any contraction, remember, every contraction is a value zone. It's an area of interest. The market came here again, gives us contraction. Let me show you the contraction that the market is giving. The market was contracting around this area, giving us a structure here. Okay, it was contracting, giving us a structure. You duplicate the line to the upside so that if it breaks from the upside, you will know that it might push to the upside. But if it breaks to the downside, you enter yourself. And let's see. You duplicate it and leave the other one at the highest high in that particular area. And let's wait for a breakout to enter another trade. We enter here. Okay, you see, we have the breakout here. And immediately after this breakout candle, this would be your entry. This would be your entry. That would be your entry. Let me make that entry blue. That would be your entry, guys. That would be your entry. This would be your entry here at this point. Okay? This would be your entry here at this point. That blue is too dark. Let me look for a brighter blue. Yes, that would be your entry, okay? And then you see that, where would your stop loss be? Where would your stop loss be? Where is the previous low? This is the previous low, okay? So your stop loss would be here, guys, a little bit above this low. And you see that the market never came back to it. It didn't come back to it because the market is pushing to the downside. It came back to retest here, but it finally pushed, giving you how many pips again? Look at this. How many pips again did it give you from your entry to down here? 1,157 pips again, guys. 1,157 pips. You see, this is how you ride the market. You ride the market like that. Then the market gave you that pip, okay, and it is at our take profit. If you had identified all your take profit areas, then you would have known that at this point, and you see it is even now very close to our support that we identified on our 4 hours time frame. This is our support. Okay, guys. So that point you would have exited the market. Okay, you would have exited the market because at this point you would have identified already that there's a take profit zone, there's a take profit area around there. Okay, there's a take profit area around there. Okay, remember our last take profit was here. So we are not seeing what's happening behind, but let's go to 15 minutes and see if we can see it. See if we can see it. Oh, excuse me. Oops, what's happening? Yeah, if you go back in time and you keep you keep identifying all the areas for your take profit, you would have noticed that before the market reached that area, it would have been a take profit area for you and you would have exited the market. Okay, you would have exited and left that market. So guys, that's how you analyze these things. Okay, that's how you analyze these things. Now, let us look for an opportunity for a buy and see if the same conditions match for a buy entry. Okay, I'm going to delete everything except I'm going to delete these two except the trend lines on our 4 hour time frame so that we don't have to draw them again. Okay, so now let's look for a perfect area for a buy. So on our 4 hour time frame, we notice that we could have a possible buy This one didn't really touch well, because if we look on our 5 minutes time frame, okay, when we look on our 5 minutes time frame, we don't see it really touching. Okay, see, you see, this is it. It didn't really touch our trend line. Okay, it didn't really touch our trend line, but let's look for an opportunity here in this channel that actually touch our trend line and then identify what happened. So here we have an opportunity. We had an opportunity here. You see here, it actually touched our trend line. And here on the 5 minute, just looking at this market here on our 5 minute, guys, you notice that what we already had what a divergence, a convergence. So remember, now it's for buy because it is on our support. So we are looking for convergences. Okay. So what do we have here? Look at this. Let me try to draw the bottoms. This is a low and this is another low. What do you notice? You notice here that we have lower lows on our 5 minutes. This is a low, this is another low, but this low came lower than this previous low. And on our indicator window, what is happening? Look at what is happening. We have what? Higher lows, which is the opposite of this. So instead, the market is going up on our indicator window, but on our chart, the market is coming down, giving us lower lows. Do you see that? First confirmation is that this market is at a support, at a support area, okay, that we identified on our higher time frame 4 hours. And then again, now we are having a convergence, okay? We are having convergence. And what is convergence telling you? Convergence is telling you that the sellers who have been bringing this market down are getting exhausted and the buyers are about to push this market to the upside. Guys, this thing works all the time. And remember, I told you again, as the market is pushing down to the support, it would always give you a structure that you will use for your entry technique, which is what? The breakout structure. The breakout structure. Okay, so it might not be very clear here. You might not be seeing the convergence here, but let's go to our 1 minute time frame. You will see it even better. Okay, you will see it even better. Let's go and look for that same area on our 1 minute time frame. Let's go there. I think this is it. No, I'm looking for that same area. Okay, this is it. This is the area, guys. Okay, this is the area. So let us see. Let us look at this thing, guys. Let us look at this. This is what we had on the 5 minute time frame. You see that we had this low here, we had this low here. Okay, but on our on our indicator window, even on 1 minute, we are still having a convergence. Look at this low here. It's higher than this low here. It is higher than this low here. This low here is this low here. And this low here is this low here. Is this low here. So you see that we are having opposite patterns. This one is giving us lower lows, while on our indicator window, we are having higher lows. Okay, on our indicator window, the market is pushing upward, but on our chart, the market is pushing downward. That is convergence, guys. Okay, now let's focus only on this area that finally touched our trend line. Let's focus only on this area, even that finally touched our trend line. So let me just take away this. Let me just take away this. And let me take away this. Let's focus only on this area. What do you still notice? You notice that, look at this. The market was coming down, guys. If you can train your eyes to see these things, then you will always be in profit. You just need to train your eyes to see it. If you can see it, you can have it. That is what I always say. If you can see it, you will have it. Okay? If you can see it, you can have it. Okay, now look at this. We have lower lows here. What do we have on our indicator window? Look at the market pushing to the upside. Pushing to the upside. This low represents this low. This low, which is even lower, represents this low. But here on our indicator window, it is higher. This one is higher than this one. But on the chart, this one is lower than this one. How do you call this? This is convergence, guys. This is convergence. Okay? This is convergence. So those are the two confirmations for us to take for us to get ready to take a buy on this market. First confirmation was what? The market has pushed and it is on our support. And the support is a confirmed support because we took it from the higher time frame. Secondly, on our 5-minute time frame, we had convergence. On our 1-minute time frame, we still have convergence. Guys, what else do you want to see? Now we are looking for the last confirmation before we do what? We take our entry. And we are now looking for what? The breakout confirmation before we take our entry. Remember, I said when the market is coming down to your support or going up to your resistance, it would always give you a structure that will permit you to use the breakout strategy. And here in this case, what is the structure that we have? You notice that the market was giving us a structure consolidating, giving us equal highs around this area. It wasn't able to break here. It came here, rejected, came back here, rejected, came back here, rejected, came back here, consolidated for a while. Okay, so what do you want to do? In this case, we are not having a structure that is coming down like this, waiting for a breakout out of it. No, rather, in this case, we are having a consolidation box kind of structure. Oh, guys, Forex is simple. Forex is simple. Forex trading is simple. So this is how you identify this type, because you're expecting this market to break to the upside, okay? You're expecting this market to break to the upside because of what? You have convergence down here. So you have to identify this area. I am using a box because it is giving us flat tops, okay? I could just as well delete this box, okay, and just use my lines to identify just the tops, okay? I could just still do something like this. So you must not use a box, but I love using box because it's easy for me to just, so you can still just do this, okay? You can easily just use your lines, but for such ones, I would prefer to use my box, okay? I prefer to use my box. It's the same thing. And now I am waiting for what? A breakout. This box would permit me not to enter this market in a wrong place, okay? It will permit me not to enter in the wrong place. If this market should push and come back down here again to this same area, I could still take my trade at this area because I already see a convergence, and it will be giving me double lows, equal lows, but it will be giving me higher lows here, okay, on the indicator window. So I'm going to wait for a breakout because our strategy says entry is upon breakout. So where would be our entry? Our entry would be after this candle. You see this green candle? Let me enlarge the screen. You look at this green candle here that finally gave the breakout. It broke out of it and closed outside. That's our trigger. So your entry would be here. This would be your entry. Oh, guys, it's simple. This would be your entry for a buy. And what does it say? That your stop loss would be at the previous what? The previous low. Your stop loss would be at the previous low. So when this market was coming down, what was the previous low that it gave us? This is the previous low. Okay, this is the previous low. You can't use these ones as lows because this is a consolidation. This is just a zigzag movement. It's a consolidation, but this is a low. So your low would be here. Your stop loss would be here. Below this channel, just below that channel, just below this box, this consolidation box, okay, and below this low. So this would be your stop loss. So let me make the stop loss red. Let me make that stop loss red. Yeah, that would be our stop loss. Now let's see how many pips would be our stop loss so that we would know how many pips would be our first take profit. Let's see. From our entry to our stop loss, that's 400 pips, 490 pips. Ooh, this one is gross, like 500 pips. So definitely our first take profit should be giving us something to like the same. Okay, let's see. Our first take profit, we now have to identify what? Let's first of all identify our take profits areas. So our first take profit would be at this high here. Okay, let's go behind and see the other high. Our next take profit would be at this high here. You always want to take your take profit a little bit before the edge of the high, okay, a little bit before the edge of the high, so that if it has to reverse anywhere before, it will still hit your take profit. It will still get to your zone. This another high, which would be our next take profit for sure. Okay, just like that, you keep going behind, identifying the highs, which will act as your take profit. This is another one. So we have altogether 1, 2, three take profits, three take profits. Okay, those are the three take profit zones that we have. Okay, and let us now see if our take profits were hit. Our first take profit was hit. This was our entry, our stop loss. Let's see how many pips was our first take profit. From our entry to our first take profit, how many pips? 500 pips. Guys, you see this thing, it works all the time. 500 pips for our first take profit. What was our stop loss? How many pips was our stop loss? 500 pips. And our first take profit, what? 500 pips. That's why I tell you guys, a good strategy would always give you the perfect area for your stop loss and your take profit. If you are the kind of trader who trades a ratio, a risk reward ratio of 1:1, then this strategy is very suitable for you to always be able to be in the money with a risk reward ratio of 1:1. 1:1 risk reward ratio means that your risk is equal to your expected take profit area. What you're risking 500 pips to make 500 pips profit. This strategy will be suitable for that kind of trading if you have that kind of discipline. And then as the market kept going further, you notice that what the market was. Let me reduce the chart. It was too gross. The market did what? The market hit your first take profit, went up, but did not touch your second take profit. Okay. It came back down. But because we already know we had convergence at the bottom here, we have confidence that this market would definitely shoot to the upside. Before now, you would have already removed your stop loss and put it above what? Above your entry area. Yes, you would have put it above your entry area. You notice that the market did everything that it was doing here, came back to your entry area, it would have hit your stop loss. Hit your stop loss, get you out of the market. But look at this. This is your entry, so you didn't lose anything. You did not lose anything. You didn't lose anything in this market, guys. Okay. And this market, when it came back here, okay, when it came back here and you saw that it is coming, it is retesting this area of the breakout here. Guys, it is retesting this area of the breakout here. Look at this. It is retesting this area of the breakout. It did not go lower. It means that this market was still pushed to the upside. It was still pushed to the upside. Okay, so you would have still entered your entry again here and still come back below here to put your stop loss. So your entry will still be there. You come back here to put your stop loss. Okay, you come back here to put your stop loss. All right. But for some protective traders, once you hit your first take profit, okay, sometimes the market will just keep going and hit all your take profit. Sometimes you will hit your first take profit, come back even right to your entry point like this. Okay, so you can just close your position, keep the profit, wait for it to come back to give you another proper entry. And it came here, you entered again. And you came here, you entered again, and look at that. The market kept doing the same thing until it finally hit your second take profit. It hit your second take profit. Hit your second take profit. It went further, hit your third take profit. So all the take profits were hit. It smashed all the take profits. Okay, once it touched your third take profit, and then you see that the market is going, because as it is coming down, as it is doing all of these things, guys, it keeps giving you structures to enter this market. It keeps giving you structures. It keeps giving you structures. Let me identify some of those structures. When you entered here the first place, the market went up. Okay, the market went up. And then when the market was coming back down, you're waiting for clear structures for buy opportunities. Now the market is coming down. What do you do in such a place? You see that here the market gave you a structure. The market gave you a structure. You want to maintain only the structures for a buy, not the ones for sell, because this is a structure for sell. If you see, this was a structure for sell. A breakout here, it came down, you would have sold. Okay, but you are not selling in this market because the market is coming from what? A support area, and you are looking for opportunities that is taking this market up. So the opportunity you would have been looking for are the ones for what? For that will give you buy opportunities. This is one. This is one here. This is one here. Okay. Oh. This is one here. Okay, guys, this is one here. So even when this market was coming down, you would have understood that this area would have been a perfect place for you to enter, because first of all, it is a retest of this breakout down here. And then again, it is at the bottom of this small structure that you have drawn here. Okay, so you see you entered here. But if you were following the breakout strategy, once you identify the structure, this would be your entry. Your entry would be here at this breakout. You see how this candle, your entry would be here, sorry. This green candle broke out of the structure and closed there, so you enter there. And where will be your stop loss? This previous low. Your stop loss would be here, this low here. And the market came, and where will be your take profit? If you just see, look at this, you will have a take profit here. I'm talking now for somebody who missed this entry and wants to catch this market just to make 500 pips. Okay, so when you come, you will not just identify this and start enter. You want to identify where the market is coming from before you start knowing what direction of trades you should be taking. And you notice that the market is coming from a support with divergence, so you should be looking only for buys. Okay, and you're looking for what? 500 pips a day. So you came here, you identify the structure for your buy, you enter here at this breakout. Okay, you enter at this breakout. This is the previous low for your stop loss. Where will be your first take profit? Your first take profit will be here. This will be your first take profit at this high here, and your next take profit will be here. This will be your next take profit at this other high here. Let us see. This is your entry. This is your entry. This is your stop loss. How many pips? From your entry to your stop loss, how many pips? 240 pips. Now from your entry to your first take profit, how many pips? Let's see. To your first take profit, how many pips? 260 pips. Guys, you see this thing works all the time. And then let's see now from your entry to your second take profit, how many pips? 518 pips. You're done for the day. You made your clean 500 pips for the day. You're done. Okay, you're looking again for another opportunities for another buy. Let's see. Let's keep identifying, guys. We always have them. Look at this. It was coming down here. It gave you another structure. We duplicate the lines. Okay, you duplicate the lines. Try to make it very accurate. Let it touch the edges. Okay, let it touch the edges. So that you get a perfect breakout. Okay, you identify this one again, and you know that already this market is pushing to the upside. Okay, it's pushing to the upside inside your channel that you identified on 4 hours time frame. This is your entry. You see this candle broke out of here, closed. Your entry is just there. Your entry is there. Where will be your stop loss? Below the previous low. Okay, you can maintain this low. This would be a low. This would be the previous low here. The previous low here. You maintain this low, okay? And then where will be your first take profit? Look at this. This is your first take profit, this high here. And then your next take profit maintains again up there, okay? And let us see how many pips this one would give you from your entry to your stop loss. How many pips? 228 pips. Now from your entry to your first take profit, how many pips? 268 pips again, just like this first one here, again. And from your entry to your second take profit, how many pips? 478 pips, almost 500 pips. Okay, 478 pips. Guys, you're good. You are good to go. Okay, it keeps giving you buy opportunities. It keeps giving you buy opportunities in that same market. The structures, you would always see them. It keeps giving you buy opportunities. It keeps giving you buy opportunities. You see that this one gives you another structure, and even here gives you a convergence, sorry. Here is giving you lower lows. Here is giving you higher lows. The indicator is going up, but the chart is coming down. It is not on a support, but we already know that the market is pushing to the upside. So we are looking for any opportunity to buy that pushes the market to the upside. So your entry would be here on this breakout here. Your entry would be here on this breakout. and your entry will be here after this green candle closes, and your stop loss would be below here. See your stop loss below here, because this low was not there yet. So your stop loss will be below here. So the market, you entered here, see the market came back to retest your entry, the breakout area. It came back to retest here, but it didn't get you out because your stop loss is below the previous low. So it didn't reach. It come up, and then your first take profit will be here. There's no low around here. So this is your entry. So your first take profit will be here, up here. This will be your first take profit. Okay, let's see how many pips from your entry to your stop loss. How many pips? 300 pips. From your entry to your first take profit, how many pips? How many pips is that? 390 pips, almost 400 pips. Your second take profit will be up here. How many pips? 800 pips. Okay, the market is still going. The market is still going. See, second take profit was hit. This is it. This is the area for our second take profit there. This will be it for your second take profit here. See, 800 pips, it was crushed. This is it here. This is it here. Guys, this strategy works all the time. It works all the time, guys. I don't want to make this video too long. It is already too long, which wasn't what I was intended. But guys, when you're giving out such knowledge, you have, to dish it out all. You just have to dish it out all, because if you give it partially, if I should give it partially, guys, you might get lost. And before I want to bring up another video, you might have forgotten everything you learned from the previous video. So guys, that is how we trade in this market. That is how we trade in this market, guys. You want to follow these steps. Watch these videos over and over again. So I've analyzed this market in three very simple steps, and you have seen it all. Get into your charts and start practicing. Okay, get into your charts and start practicing. Very soon, another video will be coming up. I would always be doing this analysis like this until you guys really grab it. But if you want a one-on-one with me, okay, then you have our Telegram details in the description area for a one-on-one with me. We would negotiate the time, okay, and we would also put out some things aside so that I would have a one-on-one with you to be able to explain to you all these things, guys. Okay, and then again, there would be group for signals. Once we have the first 100 people subscribe to this channel, there would be a group for signals. Okay, and guys, the offer is going to be crazy. Okay, and you would be having signals at least, okay, you would be having at least 4 very accurate signals. Okay, at least 4 very accurate signals no, I don't want to say every day, like 4 signals every 2 days. Yes, yeah, because I have other things that I'm doing. I don't spend all my time on the charts, so I can't say I will be giving you guys signals every day, but it's going to be a crazy offer. Okay, so the first 100 people who will join this platform, who would subscribe, I'm going to create a group, and those who want to be in the signal platform, you would get the details about that. So guys, thank you very much. And if this is your first time watching our videos, then this is FX Cash Academy, and I'm your boy FX Cash. And if you gain any value from this video whatsoever, then guys, please, you want to hit that subscribe button so that every time we upload a new video, you'll be one of the very first people to get notified, guys. And if you really gain value in this video and you want to help somebody to a friend, then please hit that like button, hit the share button, and share this video with your friends, guys. And you also want to leave us a positive comment on the comment area below. That would help us boost this channel so that we can reach the YouTube algorithm, can help us reach as many people as possible to help them to in their trading journey. Guys, we are all about being successful in our trading journey here at FX Cash Academy, and we don't want to leave anybody behind. We want to hold your hands and we want to work with you step by step. We want to walk you through the process of becoming successful in your forex trading journey. So guys, you want to stay tuned to this channel. Every time we upload a new video, watch it, contact us, ask your questions, book your schedules for a one-on-one, and we are going to go all the way up every other day successfully, God being our helper. So thank you guys for watching, and until our next video, this is FX Cash. Goodbye.
2017, I joined the team, yeah. My life has changed completely, I'm a new man. 9 to 5, fuck it, I don't need that. I'm a forex trader, please don't ask me where my G's at. I'm a forex trader, I'm a forex trader. I'm a forex trader, yeah, I'm a forex trader. I'm a forex trader, I'm a forex trader. I'm a forex trader, yeah. Nigga, see you later, nigga, see you later. Nigga, see you later, yeah, later, alligator. Nigga, see you later, nigga, see you later. Nigga, see